Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for March 5th, 2012. As always, this is Jason Ayres of OptionSource.net. Let's start off with a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. Well, the dollar index reversed last week to close above 79. A break above the 79.80 focal zone opens the window for a move higher. A break back below 79 is likely to retest the 77.78 support level. Let's take a quick look at the daily chart. We can see here within the daily snapshot that it appears as though the dollar index has broken a near-term trend line. Combined with the break above 79, we do anticipate a test of the 80 resistance level this week. Let's take a look at the CDD, the US versus the Canadian dollar. Well, the CDD continues to trend lower. 98.99 should hold as support. A bounce higher this week is likely to meet resistance at the 100-101 focal zone. A break below 98 opens the window for a move lower. Let's take a look at the YUK, the US dollar versus the Japanese yen. Well, the YUK hit our projected target at 81.5, 82 last week, and the trend is clearly to the upside. However, we are open to a pullback, which would likely test support at the 80.5, 81 focal zone. Let's take a look at the EUI, the US dollar versus the euro. The EUI appears to have broken a short-term downtrend, and a break above the 75.76 focal zone should signal a tradable move to the upside. Next up, the BPX, the US dollar versus the British pound. Well, the BPX reversed off of the lows on Friday to close within the 63, 63.5 focal zone. Rejection here opens the window for a continuation lower, back down to test support deeper into the 62.5, 63 level. A break above 63.5 should signal a move higher. Let's take a look at the US dollar versus the Australian dollar as seen here in the ISC FX Options pair value AUX. Well, it appears as though the AUX has formed a double bottom at the 92.93 support level. A break above 94 opens the window for a move higher. Let's take a look at a few of our key points. First of all, the US dollar index closed above 79 and appears to be on the move to the upside. The CDD continues to trend lower. However, the pair is likely to retrace higher this week with a bounce off of the 98.99 support level. The YUK is likely to pull back moderately this week after hitting our upside target last week. However, the trend remains to the upside. The EUI has reversed and broken a short-term trend line, suggesting a tradable move to the upside. The BPX continues to trend down, but reversed off of the lows on Friday to close within the 63, 63.5 resistance zone. A break above 63.5 should signal a move higher. The AUX failed to break lower and now appears to have formed a double bottom. A break above 94 should signal a tradable move higher. And this has been your ISC FX Options Weekly Outlook for March 5th, 2012. As always, this is Jason Ayres of OptionSource.net reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISC FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.